Alright guys, so let's talk about central banks today and how the move away from the dollar is getting very real. Now by now, everyone should have seen this coming. There are so many reasons why the gold price has been rising. Now gold made a strong rebound back above 3400 and silver has also broken past $35 very convincingly. Now even platinum is up by more than 4%. Now, I'm probably preaching to the choir here, but it's really key to understand what is driving prices of metals even higher, especially if you're new to this. Now, everything really started with the G7 freezing Russia's assets. And we said 3 years back that that was crossing the Rubicon. It's a clear signal to go long on gold because there's simply no coming back from that move. Now, Goldman came to the exact same conclusion we had. They measured institutional gold purchase on the London market, and guess what they found? Before the US immobilized Russian money, central banks around the world bought less than 20 tons a month on the exchange. After freezing, it quadrupled to above 80 tons of gold. Now, talk about cause and effect. But now the situation is even worse. Since Liberation Day, Trump has injected two major catalysts for gold. He has sent the dollar down into a tailspin that has pissed off foreign investors all over the world. Even if you hold a treasury bond that yields 5% for the next 10 years, what's the point when the dollar might be about to collapse by another 10%? And that's what Wall Street themselves is forecasting. You are still in the red. And if there's one trend to monitor, it's the total foreign holdings of US treasuries. It's one of the most important single chart that tracks foreign liquidity in the world's biggest single investment market. And this is where we must pay attention. In 2008, before the housing collapse, trust in US assets was at an all-time high. Foreigners held 56% of total outstanding US government debt. That was the gold standard investment. Banks held on to it as tier 1 collateral. Countries boosted their own treasury holdings because they needed dollars for global trade as well. But 17 years later, the story is drastically different. Foreign holdings have dropped to just 30%. So we have to put the headlines in context. The absolute dollar amount might be rising, but in percentage terms, the move away from US bonds cannot be denied. And where are they moving to? They are heading to gold. Now, the trade war also plays a very important factor for gold demand. And thanks to Trump's tariffs, the main driver of US growth, private consumption, is weakening. Now, we have twin leading indicators that tells us things are not going in the right direction. The ISM for manufacturing and services are both in the contraction zone, which is below 50, and honestly, it shouldn't be a surprise here. Input costs are higher for the manufacturing industry, so new orders and production they are starting to fall. As a result, services are also affected. So, as an investor, holding the currency of an economy that's contracting while engaging in a trade war is a terrible option. You want to spend your money elsewhere, either you stockpile commodities or you store some in gold. But wait, it gets better. The US government is committed to endless deficit spending, and there's no stopping this train.
That growth will average 3% in the long run after the One Big Beautiful Bill is passed, which is nearly double the ridiculous CBO projection. This higher growth would result in $4.1 trillion in additional revenue over the next 10 years. Between the common sense spending reforms contained in the One Big Beautiful Bill and the robust economic growth that will be generated as a result of it, there will be no increase to the deficit.
There will be no increase in the deficit, that's what she said. And if you buy that, boy, do I have a bridge to sell you. And this brings us to the basic argument for gold and other hard assets. Even Elon Musk is pouncing on Trump's bill, which is it really tells you something. The bigger the deficit grows, the closer we get towards an eventual default, which is getting worse thanks to higher interest rates. And here's the crisis in one single chart. It took over 200 years to reach the first $12 trillion in debt. And between 2020 to 2024, we added yet another $12 trillion. And how is this even sustainable? The CBO says that the big nasty bill is going to increase the deficit by at least $2.4 trillion over the next decade. Bonds will be issued to cover that need. And eventually, the debt will have to be repaid. There's really no debate here. The US can't do a technical default or the entire economy will collapse. So the next best strategy is to simply beg the Federal Reserve to print the money, which they will. Now, central banks around the world understand this, especially in China, especially in Asia. there will come a time where everything tips over because both fiscal spending is out of control and rates continue to stay high. And if the bill passes, the US national debt will soar to nearly $55 trillion by 2034, and that's just 9 years away. So prudence dictates that countries diversify their asset holdings, especially for the long term. Now, Trump isn't the first or the last president to increase the deficit. In fact, he's thinking of scrapping the debt ceiling, and that's a preview of the next 3.5 years to come. And we have a stunning report that the biggest whales in the world aren't done with stacking gold just yet. In fact, their demand is not price sensitive at all. They don't care about the price. Central banks and sovereign wealth funds, they've doubled their pace of gold buying in the past 3 years. And here's the kicker, they aren't declaring those purchases yet, which makes total sense. Now, if you're a buyer of something whose price you know will continue to rise, you don't want people front running you, so why tell the world? You keep silent, you stay quiet. And the second reason to keep quiet is not to antagonize the US government. Now, China can declare they are buying gold every single month, every single day. But imagine if US allies do the same thing. The optics will be extremely bad. Washington could just drop them a call and demand they stop buying gold and they start purchasing treasury bonds instead. So that's a clear and present danger. Globally, central banks are buying 80 tons of gold a month, and that's around $8.5 billion at current prices. And most of this buying is in secret. In addition, global bank HSBC did a survey and the results are really telling. More than a third say that they will buy more gold this year, and none of them intends to sell any. And it does really make sense. The dollar could continue to collapse, and should Trump continue his trade war, your flow of dollars would also stop. Where's the need to buy treasury bonds anymore? And what's really interesting is how the investment revolt is happening. It's clandestine, it's cloak and dagger stuff. Central banks don't want to reveal their hand, and there will be no major announcement coming. Now, since the Russia Ukraine war, central banks are hiding their gold buying. In 2024, they bought well over 1,000 tons, but officially they only declared around 350. And this action will fly past most people's heads, but for us, central banks buying will be a constant bid to the market. Goldman is also betting on that, and that's why they upgraded their year-end forecast to $3,700. Now, I have no idea if that will come to pass, I'm not clairvoyant, but I won't be surprised if it does. And we need to hammer in the fact that a deficit tsunami is coming. Besson is trying to convince the world that a tariff revenue will paper over the horrific cost of the bill.
What we've seen is we keep hearing from the CBO that there's going to be a large deficit from the bill, which we disagree with, but using the CBO scoring, they came out and scored the tariff revenue. We think it'll be the minimum of $2.8 trillion over the 10-year window, which actually puts the bill in surplus if you include the tariff revenue, which they won't do.
It gives you a tremendous surplus, but we're not allowed to use that. For some reason, they say scoring. Nobody knows what scoring means. Maybe a couple of people, but nobody. Somebody sits in the background. They say, well, we're not going to allow that. They're not allowing other things that we have that are tremendously profitable for our country.
And once again, Besson is assuming that the tariff revenue will continue unabated. But if the consumer breaks and stops importing stuff, the revenue will collapse. But let's touch a bit on Trump's big call with China. And it's really important we set the stage here. Now, if we listen to the administration, it's either China begging for a call or it was a mutually agreed situation. But even the Chinese aren't taking any chances with this narrative. China has confirmed that President Xi held a phone call with Donald Trump, and this was done at the latter's request. Basically, the US president requested a call with Beijing. So can we consider this a Trump taco move? I don't know, you tell me. But here are some of the facts regarding the call. It was 1.5 hours long, and that was enough time to watch a movie, and it revolved almost entirely around trade. Now, Trump said that he yielded some progress on rare earth supply, but I highly doubt it. Now, from the Chinese readout, President Xi made 3 critical points. He warned Trump over arms shipments to Taiwan. Now, that shouldn't be a surprise. He also told Trump to remove the negative measures imposed, and that obviously meant everything from the chip sanctions to Chinese student visas. But will Trump really take a step back? Because if he does, everyone will call him taco again. Finally, Trump revealed that he will be visiting China with the First Lady sometime in the future. Now, we have no idea when, but probably in 2025 this year, strike while the iron's still hot. As we mentioned in our previous videos, Trump really needs the rare earths deal to go through. If it doesn't happen, US manufacturing of critical industries, it's done. There's no way to compress 2 decades of hard work and trillions of dollars spent in one term. It's not physically possible. Now, can the US print money to make it happen? Now, that's possible, but it would crush the dollar, break the bond market, and send gold to the moon. And for all purposes, Trump is trapped and the walls are starting to close in. Now, you can literally hear a sense of resignation in his voice. It's as if he came to a realization that he must negotiate. Trump might hold some cards, but the entire deck is made in China.
And we've straightened out any complexity. It's very complex stuff, and we straighten it out. The agreement was we're going to have Scott and Howard and Jameson will be going and meeting with their top people and continue it forward. But no, I think we have everything. I think we're in very good shape with China and the trade deal. We have a deal with China, as you know, but we were straightening out some of the points, having to do mostly with rare earth. By the way, he invited me to China, and I invited him here. We both accepted. So I'll be going there with the First Lady at a certain point, and he'll be coming here, hopefully, with the First Lady of China.
So really watch things on this front. We need to see sincere steps from the Americans to roll back the sanctions. And if they don't, Trump won't be able to stick the landing. China obviously wants to buy more AI chips, but if Trump gives in, the existing plan to contain Chinese AI would collapse. But good or bad, it's really decision time. But I want to end with gold because it's just so important. No one knows where the price will end this year, but the trend of gold returning as a reserve asset is definitely back. Central bank holdings of gold are heading back to historic levels, back to an era not seen since the Bretton Woods period when there was still a semblance of a gold standard. Now, before people misinterpret me, I'm not saying we are headed back to a gold standard where dollars can be swapped for physical bullion at a central bank. But what I am saying is that trust in paper assets is collapsing, and in its stead, gold is the asset of choice the big boys really trust. Now, will there be an eventual revaluation of global debt to gold? I have no idea. But if it does happen, I'll be happy because I own some. And what was the old saying? He who has the gold makes the rules. Maybe this time it's literal. But let me know what you think. Will central banks keep buying gold? Or will Trump backtrack his sanctions on China? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.